Hi, I'm Terrell Turner. This is my amazing wife, Lola Turner, and you're watching another episode of the Business Talk Library. And today we're going to talk about being able to pay yourself and the challenges that a lot of people have because you want to get paid for what you do. So stay tuned. So the topic is paying yourself. Now, this is a common question we get a lot from different business owners where you're working really hard and they're like, you know what, how do I pay myself? So, have you heard many people struggle with this or ask this question?
Yes, I think a lot of people, especially in the beginning of their business, are just trying to survive or trying to kind of go through the point of where they're covering their expenses. So I think if you're so used to doing that in your business, sometimes it makes it challenging to kind of flip the switch and be like, all right, like the business is at a point now where I am making some money, or I think I'm making some money, or even, hey, how do I get the business to a point where it's making enough money to just cover more than my day-to-day expenses? Or if I need to pay employees, like how do I actually start to see the benefit of all this work I'm putting in?
So, and I think, that seems, it seems like sometimes like it's like an oversimplified idea, but I'm always surprised at the number of people that are putting their blood, sweat, and tears into building their business, and they don't have a strategy for how to pay themselves.
Yeah.
I mean, it's almost like, at least when you had a day job, when you were working a job and you were working in somebody else's business, you knew, hey, I'm doing this work because a paycheck is coming. And it kept them motivated. I mean, I know for me, like if my employer ever told me like, hey, Terrell, we're not going to make payroll, I wouldn't have been motivated to do my job.
Right.
But it's just like, I think about that. So many people like in their own business, it's like they're doing all this work to pay their vendors or pay have their employees pay their contractors, but yet they're shortchanging themselves. And I often wonder, like, how long will your motivation last if you're doing that?
That's a really good point, and I think something that we need to spend some time on, because I do think there is that motivation of the grind in the business, but I think eventually you get to a point where you do have that burnout where you feel like, okay, if you're not paying yourself, maybe you feel like, you're not really at the point where you need to, or some cases, like we were talking about this before the show went live, where some cases people just cover their personal expenses with their credit card because they're like, well, as long as I'm getting by and I can cover my personal expenses, I'm okay. But in reality, you need to develop a plan for that, because like you said, there's only so much you can do that before you start to get demotivated, or you feel like, man, like I'm paying everybody else but myself. And in reality, and that's one of the things that people talk about, even when it comes to budgeting, not just on the business side, but on the personal side, is you pay yourself first. Because I think a lot of times when we look at it and we come up with a plan, we're looking at, hey, all the expenses, all the things I have to pay, I have to pay my electricity bill, utilities, all this stuff. And then whatever's left, I get to keep. And it's like, if you don't really have a concrete plan prior to the expenses coming through, you're always going to be left kind of holding the bag with not a lot at the end of the day.
I think that's an interesting point, because you hear a lot of people talk about, oh, you should pay yourself first or whatever. And it's
harder to do then.
And it's one of those things that I wonder, like, okay, all right, if you pay yourself first, what does that mean for everybody else? Like, is that a realistic? I mean, I have my own opinion about it, so I'll reserve it. because I want to hear your thoughts on it first. Like, is it realistic to pay yourself first?
I would say so. I would say it is. Now, let me caveat that. I think it's realistic to pay yourself first if you have an effective plan to do that. I think about, just more on the personal side when we were working to get out of debt. If you were spending all the money you were spending and you didn't have a concrete plan ahead of that, then at the end of the day, paying yourself was just going to leave you short on the other things that you needed to do. But I think what it really required is planning ahead of time to be able to say, all right, like, I want to do this first. What do I need to do? And then I think in some respects, depending on how disciplined you are, paying yourself first forces you to be able to have and be more diligent and disciplined with the other things that you're doing. Because I think sometimes when business owners are thinking about spending money and they're spending money in their business, sometimes I feel like a lot of times business owners think and feel like I have to spend this money on this or I have to spend money on that. And not everything is a mandatory expense. So I think really having paying yourself first and then having the expenses, the money that's left and being like, all right, now I have to figure out how to take care of the rest. It forces you to really identify and really decide what's considered critical and what's not. That's my view. But again, I'll caveat by saying you got to plan ahead. Like, you can't be like, oh, I don't know, my income is $30,000, my expenses are 33. I'm gonna pay myself 10 grand this month. It's like, the numbers don't add up. You gotta plan ahead, and you gotta have a plan to be able to do that effectively. So that's my take.
Yeah, no, I agree. I mean, I do think, from my perspective, that I know a lot of people are buying into the philosophy of profit first, paying yourself first, and I personally believe that that's not for everybody. Because I think that it only works for people who are, because let's do the math. So let's say, you make $20,000 to keep the number simple. Right. Let's say you want to pay yourself, let's say you want to pay yourself $8,000. You owe 10 grand to your contractors. Okay. So that brings you down. You started with 20.
I said the number.
You pay yourself 8. You paid your contractors 10. That leaves you with 10. Then you got your rent and you got utilities. If all that adds up to $4,000, your income or your revenue was $20,000. Now your expenses are get you at $22,000. So you're $22,000 short.
Yeah.
Now,
or $2,000 short.
Or $2,000 short.
Yeah.
Now that scenario would not work well for what I have personally seen a lot of business owners who look at that scenario and be like, okay, all right, what are you going to do about that shortage? Like, how are you going to make up that $2,000?
Yeah.
From what I have seen unfortunately, from a lot of business owners, they just it doesn't click in their mind. I need to go hustle to close the gap on that $2,000.
Yeah.
What they will end up doing is just, all right, it kind of is what it is. And I'm just like, no, how many people are you going to go talk to? Because you need to get in new customer. Like, you can't keep losing money.
Yeah.
And that's one of those things that I've seen from a lot of business owners, where it's just like, hey, it's almost like, hey, the number, it is what it is. Like, no, you need to get out there. How many people can you go talk to this week?
Yeah.
Because I guess that negative number, if it motivates you to actually go take action to do something about it, then I'm like, hey, profit first might be for you.
Yeah.
But unfortunately, from what I have seen, I would guess to say 70% of the business owners that I have seen don't have that drive to, when they see a negative number, have that drive to say, I'm going to go do something about it.
Yeah.
Especially now. I mean, unfortunately, with 2020, it's great that, hey, a lot of cash has flowed into the market to, help businesses stay alive. But I've seen the laziest perspective when it comes to people about like, oh, well, we'll just apply for a grant. I'm like, no, you can't keep losing money. And just because you got a big grant, like, all you're doing now is you're just using the grant to fund your losses. Yeah. And I'm like, at some point, you got to look at these numbers and say, hey, you know what? We got revenue of 20,000. We got bills of 22. What are you going to do to change that? Now, I personally think that that's a personal thing, where even if you look at how people budget their finances and stuff, like people like that are working a job, like people that are living a lifestyle that exceeds their means. And even when you show them the numbers, they look at it and they're like, oh, I'm like, well, what are you going to do about it? This isn't a situation. It's like, you got to go actually do something.
Yeah.
Now, I would say if you're that type of person where, hey, you see a negative number now, it sets in your mind, hey, I got to go do something. I either need to bring in more business, or, hey, I need to sell some other stuff. I need to figure out how to close this gap. If that's the type of person that you are, then I think profit first works.
Yeah.
But I think you got to be honest with yourself, because from what I have seen, I would say about 70% of the business owners I talk to, they just don't have that kind of drive.
Yeah.
So you probably need to pay everybody else first before you pay yourself, or pay yourself with what's left over.
Yeah.
Because you can't just keep shortchanging everybody else. Which I guess this is a hilarious example. Oh, I don't know if it's hilarious, but it is what it is. Like, and talking to some people like that, like talking to some people that have rental properties.
Oh,
and I was talking to someone last week about it, and they were like, they have a rental property and the person hadn't paid in the last 3 months. And they're just kind of like, I have no idea what's going on because the person's getting a check from the federal government.
Oh, no.
No. They're getting a check from the federal government they're getting a check from the federal government. It's more than enough to pay their rent and their other bills.
Oh, no.
And the person just hadn't been paying their rent. So it's kind of like, all right.
Eviction immediately.
Like in that case, they obviously, I don't know what they were doing with the money.
Yeah.
But then, it came time for them to move out or whatever. So they had to move out or whatever. And it was like, okay, all right, well, we need you out by such and such. And the person didn't have the money to pay for the place that they're moving to. So what they did was they filed an insurance claim against their renter's insurance, saying that, hey, someone broke in, they stole
something. Oh my gosh.
That the person broke in, they stole a big screen, they stole 2 big screen TVs, they stole some shoes, and they itemized it. There were some shoes that they had that were like $500 each and stuff like that. And so the insurance company, so they put in this claim for $12,000 worth of damages.
Oh my gosh. Are you serious?
They put in this claim for $12,000 worth of damages. The insurance company called the property manager and was like, hey, we, this looks a little odd. Like, are you aware that there was a break-in? And the property manager was like, I wasn't aware there was a break-in.
Oh my, $12,000. When you lie, you can't even lie well. Like, at least be what's the word? Don't be greedy. $12,000 worth of damages.
Yes.
Oh
Craziness. I mean, and like I said, the property manager was like, I wasn't aware of a break-in. It was like, well, do you recall there being 2 big screen TVs in the house? And the property manager was like, yeah, every time I went over there, I don't recall seeing that. And all of this other stuff, like, I mean, and for that person, like, they were living a lifestyle where they had the money. So it's like, oh, this is where their money was going. They were spending it on different stuff that they wanted and stuff like that.
Yeah.
And then, but it's just like, okay, this person was paying themselves first. They got their check. They paid themselves first. They went and did what they wanted to do with the money. And then when it came up to a gap, like, hey, you had your rent is due. Like, you short on your rent.
Yeah.
Like, they just didn't have the drive to go do something about it. It was just like, well, we just short on our rent. But it's just like, but every month they were doing, like, for 3 months consecutively, they were doing the same thing. They got the check. They went and did what they wanted to do with the check. And then when it's time to pay the rent, they just called the landlord, well, we don't have the money.
Oh
and the landlord was trying to be understandable until this insurance scam came up.
That's a hot mess. That is so messy. I just think, to your point, I guess very valid point that, hey, not everyone is like that. For me personally, like, I don't like seeing negative numbers, because for me, what it tells me, I don't know if it's just the economy, it tells me that this is eating into whatever extra money you have in that. And I think that's just a simple way to define cash flow is the money that you made enough to cover the expenses that you have. And I think really is if you don't understand that concept, there's only, and this is why what oftentimes happens when people find negative balances in their bank account, because it's like, if you do not have enough money to cover those expenses, the balance zero minus, this is not like multiplication where 0 times anything is 0. No. It's going to be negative if you don't have enough money to cover it. So I really think it's important to first understand that. And I think you brought a really good point is, where's your mindset? Because depending on where your mindset is, you just need to be honest with yourself and say, all right, I'm the person that if I do pay myself first, I'm going to feel the pressure to be able to cover the gap for the people that I still owe money to after the fact. Or, hey, if I pay myself first, I'm going to be living my best life. I'm going to be comfortable. And then I'm going to forget that by whatever date, I need to pay these other bills. You just really need to be honest with yourself. But I think with the mindset aspect now addressed, let's talk about how to practically pay yourself and how to go through that process and understand, all right, what are the pieces you need to consider? How do you go about doing that? They're like, all right, Terrell and Lil, I'm ready. Like, what's the first thing they need to do? Which I feel like we've kind of talked about some of the pieces, but just to highlight.
But I think so. One of the questions is on, okay, how do you pay yourself?
Right.
So, you know, for most people who own a business, I mean, it's going to be like two options. I mean, you generally the two options. The first one is you can take an owner's draw, meaning like, hey, you as an owner, you're just going to take a draw, like, I guess you say, pull money out of the business. Yeah, take a withdrawal from the business, like to compensate yourself. Because from a tax perspective, depending on what type of business you have, the IRS views it as, hey, whatever money is left over, it belongs to you.
Right.
So whatever profit is left in the business, that's what belongs to you from a tax perspective. So what some people do is like, hey, at the end of the day, they take a draw out to say, hey, I'm gonna just pull five grand out of the business every single month. You don't need a lot of formalized paperwork to do that, which is why I think a lot of people end up doing it that way. Now, the other way, which I would recommend, depending on the structure of business, is to actually just put yourself on payroll.
Right.
Because what that does is it makes sure that, hey, estimated, payroll taxes are being taken out. And then it also puts it on a schedule.
Yeah.
I mean, because sometimes what people get into when they do the draw approach is like, this month they'll take 5,000 and next month they take nothing. But it's like, if you put yourself on, I guess if you make it predictable, I would say predictability helps your business, helps you plan and helps you strategize with your business. So I think, putting yourself on payroll, just like any other employee, I think is a second option for how to pay yourself on a consistent and a regular basis.
Got it. All right. That's good. I think also, I was just going to add to that. I think understanding what works best for your business, also depending, like you said, on the type of corporation, I guess, type of businesses you are, whether you're an S Corp, you're an LLC, those are the things that I guess you need to understand prior to making some of those decisions, right?
Yeah. I mean, because in the case, if you're an S Corp, according to the IRS rules, if you're an owner and you're actively working in the business, you are supposed to be on payroll already. Now, again, you probably want to talk to your CPA about, your tax strategy, because you may want to limit, you may want to make that payroll amount smaller and then, get more money from the draw, just depending on your tax strategy. But I mean, it's something to think about.
All right, good. So we've figured out we have two options. You can do the owner's draw, or you can pay yourself a salary. The next point is, I think, can you afford it? Can you afford to pay? Can you afford to? So how do we, when we think about like, can you afford to pay for that? We talked a little bit about the budget. I think the budget is the first thing we kind of need to understand when we're talking about that. So,
well, I would say before you get to that, I think one of the things that you really got to decide on is how much do you want to pay yourself?
This is true.
Because I think that's where a lot of people are.
How much can you afford?
A lot of people, I think even before you get to what you can afford, it's just, what do you want to pay yourself? Like, you would be surprised the number of business owners when you talk to them and say, okay, all right, how much money do you really want to make from this business? Most people have no idea. I want to make as much as possible. Like, it's very difficult to plan for that.
And that's more so on like the total revenue of the business that people don't really know what they want to make,
as far
or
as like,
how much do I want to walk away with.
If you're operating your business, I would say a general mindset is look at your business and you as two separate things. Like, your business has a life of its own. You have your own life. So it's just, how much money do you personally want the business to give to your personal life?
Yeah.
Because if you look at them as two separate parties or two separate entities, I think that's going to help you out a lot. And so a lot of times I often think that people, they just look at it as one, or they're like, hey, I just want to make as much money as possible. And some of that may be, look at your personal expenses. How much money do you need to cover your personal expenses? Like, if you have no other income, then it should be a simple answer. I mean, like, hey, this is how much money I need the business to give to my personal life for me to be able to live. And I think people have to figure out, like, what is your number? Because a lot of people don't take the time to figure out what their number is.
Yeah. No, that's good. So just understanding what it is that you want is the first step. So then the next piece would be talking about just budgeting. So understanding, which we kind of spent some time on it when we were talking about it in the beginning. But when we think about budgeting, is just comparing how much money you're bringing in, or what would kind of be your take on that?
Yeah, I mean, I think the simplest way is, what's your revenue? How much money are you bringing in from your sales and from the customers actually paying you for your products or services? And then also, what are your expenses? And one of the things that you want to make sure you include in the expenses, you want to include how much you want to pay yourself.
Right.
Like, that should be part of your expenses. Like, that is just as important as you paying your rent.
Yeah.
That's just as important as you paying your employees.
Yep.
Because you should, even though it's your business, you shouldn't be working for free.
Right.
I mean, you should be compensated for the work that you put into the business. And
Right.
so if you are planning for that ahead of time to say, hey, all of my other people, I need to pay this is how much I want to pay myself. So, hey, here's the total expenses for the business.
Mm-hmm.
That way you start to get a view of, hey, how much does it really cost to operate your business? Because I think a lot of people don't include their compensation in the budget, which is why they end up getting upside down. And unfortunately, there were a lot of people who missed out on some huge opportunities, like with some of the SBA programs that happened in 2020, is because they weren't included in the regular payroll expenses.
Yeah.
When the SBA funding came out to pay for payroll, they were like, oh, okay, I'm going to include my stuff. And the SBA said, like, nah, you weren't in there already. Right. So you're not an employee, you're not included. Yeah. So I think people being more strategic about that and saying, hey, you need to make sure your compensation is already in there.
Yeah.
And then I think the last thing on that is really, okay, once you get a view of, hey, here's how much it really costs me to operate my business, then you can take a step back and say, what do my targets need to be? Like, how many customers do I really need to bring in the door, or how much revenue do I really need to make to be able to cover all of my expenses?
Mm-hmm.
Because if you can get a clear view of, hey, I need 13 customers to make sure that all my people get paid, make sure I get paid, make sure all my vendors get paid.
Right.
If you know that number, it makes it so much easier for you to say, okay, all right, I need to go get 13 customers.
That's really good. Breaking it down into actionable steps, because if you don't know, you can't make the proper decision in the best interest of what you need as a business owner and of what your team needs, because no one likes to miss payroll.
Absolutely. And unfortunately, so many people are missing paying themselves.
Yeah, exactly.
Just like,
exactly.
I mean, I have the opinion that, I know some people say, oh, the customer is the most important person in the business. I kind of disagree with that. I think you as the owner, you are the most important person in your business, especially if you're a one man or one woman shop.
Right.
You are if you don't show up, I mean, the business doesn't exist. I mean, exactly. You can always go get more customers. Like, you can find other customers.
That's really
But
good.
if you are the only employee in the business, if you don't show up, the business doesn't move.
Yeah. No,
and so I think some people, they miss paying the most important person in your business. And you got to make sure that you change that up and make sure that you are being compensated for the work that you do. And then also, I think, like I said, being honest with yourself. Like I said, profit first works if you have the drive and the level of responsibility to say, if there's a gap, I'm going to go put in the work. Right. But if you on that foolishness, like that lady putting in fraudulent insurance claims, it's just like, profit first is not for you. You need to pay everybody else first, and then you get what's left over.
Exactly. And if it's nothing, oh well.
Yes.
But yes, that wraps up another episode of the Business Talk Library on RATV. Until next time.
If you'd like to see more of the Business Talk Library, be sure to watch us every week on Tuesday nights at 6 p.m.